clarification that has come in from Oil Minister Hardeep Singh Puri, where he has said that supply in the domestic market continues to remain intact. We are not likely to see any kind of impact in the domestic market, and that India has gone ahead and diversified its sources of oil in the global market as well. But to discuss this in greater detail, we now have Kunal Shah, Head of Commodities Research at Nirmal Bang, now joining us. Mr. Shah, thank you so much for taking your time out and joining us here in ET Now. Tell us, how do you assess the whole situation? And after the 1.5-2% uptick that we've seen in the market today, do you believe the worst is already priced in, and perhaps the market is penciling in only a short-term disruption in oil supply, if at all it were to happen?
Yeah, so like we heard from Mr. Ashdeep Puri, there is enough oil in the world, number one. That is a key highlight. Now, I'm coming to the Strait of Hormuz, what can possibly happen. And so my understanding says that right now Iran is going through a severe economic crisis. Out of total Iran's oil production, 80% of the export goes through China. And let us say if we have a disruption taking place in Strait of Hormuz, the shipping rates, the shipping routes changes, and it takes time for the global market to readjust and realign to the new routes. The 20% of the global oil supply from Saudi Arabia, from Oman, all these countries, the oil passes through the Strait of Hormuz. So now I believe that the likelihood of the closing down Strait of Hormuz is little low, considering the kind of economic crisis which is going on in the Iran as a country. So I believe that the sanity should prevail, and the Hormuz should not get closed. There'll be a smooth functioning, or maybe some short-term disruption can drive up oil prices by another $4-5, not more than that. So I'm not expecting Brent to go above 84, $85. And the moment there is a sign or the signal of de-escalation, you will see oil immediately dropping down. So my sense is that one should not be very worried about oil going to 110, 120. The escalation can happen, but considering the Iran's economic situation, I'm not expecting a major full-blown escalation in Strait of Hormuz.
Okay, so you're not expecting full-blown escalation, and since you said that if at all situation were to worsen, you're expecting on the upside to oil, for oil to touch that $84 per barrel mark. But what about the downside? You expect de-escalation going forward. So what is the fundamental fair value for oil at this juncture?
Okay, it's a very good question because earlier people were expecting, oil to hover between 55 to $60. Those days are over because this geopolitical premium will continue to remain there, and perhaps there will be a time or there will be a days when you see oil shooting up abruptly, or some of the oil field in Iran may get attacked by the Israel. Because remember, US at this point would not want they may find very difficult going forward. They are interested to go down. So if the inflation shoots up, that is the last thing which US will want right now. So US will possibly not attack the Iranian oil fields, and they will maintain the kind of scenario where the oil market do not get distorted. But if it does, then it's nobody's guess. So it's very difficult to predict, whether there will be disruptions or not. But I believe that the fear of 120 and 110 or $100 looks quite far-fetched. I mean, I'm not expecting those kind of scenarios.
Okay, so you're not expecting Brent crude to cross that $100 per barrel mark, and 85 could probably be the upside. But as far as precious metal market is concerned, usually whenever there is geopolitical turmoil, we see safe haven demand resuming. But this time around, we have not seen any substantial uptick in gold and silver prices. What's your outlook when it comes to the yellow metal?
Well, earlier we used to live in a globalized economy. Now we are living in a multipolar world. So whatever we have been learning from all last years, that whenever there is uncertainty, gold prices moves up. Whenever there is a dollar depreciation, gold prices, all those things are not working anymore. Uh, Most of the positive news are already discounted in the gold price. Gold trading and hovering above $3,400 have discounted rate cut, have discounted geopolitical instability. So whenever you see a we've seen a major attack by US getting involved in Iran was a very big thing. That should have led to at least $100 spike in gold, and gold today morning it went down by $15. So I'm not surprised because all of the positive news in gold are discounted. And I'm not expecting gold to move above $3,500 on COMEX. In India, it should not go above 1 lakh to 1 lakh 3,000 rupees. And the possibility of correction in months to come is very high. And I'm not very bullish in gold in a shorter term period. And these price levels, the demand is clearly abating. And I'm not expecting a big spike in spite of the fact that we've seen this sort of geopolitical, the magnitude of event was pretty high. And then two gold prices are not responding. Clear sign of weakness. And I think the follow-up selling should continue.
Okay, so you think that most of the positives are already priced in. You don't expect gold to cross that $3,500 per ounce mark in the global market. Mr. Shah, thank you so much for taking your time out and joining